Hi there, welcome to The Close. I'm Lindsay Biscaya in for Morella. Today, markets are closing in half an hour from now. So first, let's get to some of the other stories we're following for you in the BNN Bloomberg newsroom. According to a new analysis from Canada's housing agency, housing affordability challenges have eased in recent years but still remain at historic highs. The Housing Affordability Composite Index shows how affordability issues have spread beyond Toronto and Vancouver to other major cities like Ottawa, Montreal, and Halifax. And shares of Loblaw are falling sharply today. The grocer saw its largest intraday drop since December 2023 after fourth quarter revenue missed estimates and profit came in slightly above expectations. The results come as high inflation and rising cost of living have led consumers to tighten budgets and try to save money. And shares of DoorDash are climbing today. The delivery company says it is ending operations in Qatar, Singapore, Japan, and Uzbekistan. This comes after a months-long review of country-specific conditions. The American company said it wants to focus investments in places where it can build sustainable scale and long-term market leadership. DoorDash doesn't expect the actions to impact its financial guidance. And U.S. Trade Representative Jamieson Greer said Canadian and U.S. trade officials spoke today and will continue in-person talks in a couple of weeks. Greer said Canada has a few ideas which the U.S. is open to, while it focuses on domestic manufacturing. Greer was asked when he expects to reach a deal with Canada, to which he said, "We'll see," adding his team is focused on the CUSMA review, which is coming up later this year. And we'll take a quick look at the markets this afternoon. The TSX is up once again, definitely going to probably reach a new high today. We'll continue to watch that. Same story or similar story, at least south of the border. A lot of investors, of course, watching for NVIDIA's earnings, which are coming out after the bell today. And we'll break that down for you. But you can see things trading higher at the moment on that, the S&P 500, the Dow Jones, and the NASDAQ. Canadian bank earnings continued to beat estimates today, with BMO and National Bank of Canada both reporting a rise in first quarter profits earlier today. So for more on their results and his outlook for this sector, joining us now is Bruce Campbell, founder and portfolio manager at Stonecastle Investment Management. It's good to have you join us. Thanks so much.
Yeah, thank you for having me on today.
So I guess what's your takeaway first with some of the Canadian banks that we saw reporting today?
I mean, the standout is obviously National Bank with the acquisition of Canadian Western Bank. That seems to be going a little faster than they had anticipated, and it's working out a little bit better. And I mean, that seems to be the winner on the day as far as performance goes. And then even Bank of Montreal, I mean, you saw solid numbers out of there. Probably the U.S. was a little bit slower, but we kind of also anticipated that would be the case, right?
Yeah, and we saw the similar results earlier in the week. We're still expecting a couple later this week. So TD, Royal, and CIBC all reporting tomorrow. Do you expect kind of similar strength with these banks as well?
I would think that you would see similar. Yeah, I mean, the two areas that have really stood out as far as growth goes is the personal banking side and then wealth management. And both those trends probably continue. We've seen a fair bit of stability on the personal banking side. The net interest margins have been good. And then on the wealth management side, with markets being strong, you've seen, strong wealth management. And then also on the capital market side, you've seen a pickup in financing activity and some of the capital markets activities. So those areas have been strong as well.
Where do you think future earnings growth could come from the Canada's major banks if we look ahead to maybe the rest of 2026?
Yeah, I mean, what I would probably anticipate is that you continue to see the bank earnings from the personal side continue to be fairly stable, right? Unless we run into some type of recession, which doesn't seem to be in the cards right now, then those should be fairly stable. And then wealth management continues to tick along and grow, and there's more money always being accumulated by these companies. And what you probably want to watch for is additional acquisitions that some of these banks could make on the wealth management side of things. And then the capital markets, if we continue to see strong markets, there's going to be more IPO activity, more secondary offerings, and that really drives the capital markets, which can be, more lumpy, but, it seems like we've gone through the bottom and are now headed back up.
You mentioned recession, how we're probably not headed that direction, but there's probably, I'm sure, some other challenges that these financial institutions could be facing in the year ahead, maybe even rate cut decisions. Like, what's your outlook for the Fed and the Bank of Canada in terms of decisions, and how would that impact the banks?
Yeah, I mean, if you continue to watch kind of what the market's anticipating from looking at those interest rate forecasts as far as where they're going to get cut, there's probably a couple of cuts left in both Canada and the US this year, or what is the markets kind of has priced in. I mean, that certainly does have an impact on the bank earnings for sure, but it also has an impact on the economy. So while the personal banking might not accelerate at the same pace, the wealth management and the capital markets could pick up the slack that is lost in the personal banking side of things if we see rate cuts.
And obviously, as you mentioned, like the Canadian economy, a little sluggish to start the year. The housing situation in Canada, quite sluggish still. If that continues for the rest of the year, can you just kind of expand on how that could impact Canada's bigger banks?
I mean, the one issue that has kind of been on everyone's mind for the last probably 3 years now is the refinancings that are going to be happening. We saw so many people buy homes or refinance homes back in just coming out of COVID or during COVID, and those now are coming due to be refinanced. And I mean, that's always a risk because of the fact that interest rates now are higher than where they were. And so there is certainly loan loss provisions that have been built in, and there's concern there. So far, that's been handled quite well. Certainly, anything that's been done to date has been fine, and it just seems that perhaps the consumer is just tightening their belt in some way to make sure that they can meet those increased payments from a mortgage.
Yeah, for sure. Are there any other headwinds, but also like key drivers that you see for the banks for the rest of this year that we haven't touched on yet?
I mean, clearly the biggest one has to be the economy and recession. And right now in the Canadian economy, things are fairly good. We're seeing a lot of our resource companies do well. Coming up in June, when we start to see the negotiations with the U.S. and Mexico, that could potentially have an impact on the manufacturing sector. But of course, we don't know where that's going to land right now, and we also don't know how it's going to shake out. But it could be kind of third quarter or fourth quarter news for the banks.
Okay, we will leave it there. That's all the time we have. Bruce Campbell, founder and portfolio manager at Stonecastle Investment Management. Appreciate your time today. Thanks for your insight.
Yeah, thanks so much.
Coming up next, Loblaws reported their fourth quarter earnings. So how do they stack up against global retailers? We've got more on that right after the break. Loblaw reported earnings today, and while both profit and revenue came in higher, some analysts are calling the beat, quote, low quality. The company announced plans for 70 new store locations this year, along with renovations to nearly 200 existing sites. And for more on this, we're joined by Bruce Winder, president of Bruce Winder Retail. It's good to have you join us. Thanks so much for your time.
Yeah, thanks for having me on.
So a lot of analysts are calling this latest quarter low quality. Do you agree with that assessment?
I don't think so. I don't think it's low quality. I mean, when I took a look at the numbers, it sounds like everything is running pretty well. Their revenue was up 3.5%. Their gross profit was managed well. Their SG&A expense was managed well. Adjusted EPS up 11%, and retail adjusted EBITDA at 11%. So it doesn't sound like it's low quality to me.
I wonder why a lot of analysts feel that way, though. Like, is there something in there that's maybe making people feel as though it wasn't as big as expected?
They might have looked at the food comp store sales, which were up about 1.5%. But my understanding from the earnings call is, we're starting to see an increase now in food sales into Q1 of 26. So it sounds like people are alarmed, just on that. But there's a lot of good things happening at Loblaw. They've got a pretty big CapEx plan this year, about $2.4 billion. They're going to build 70 new stores, refurbish a whole bunch more. The thing I like about Loblaw is they're really reading the room in terms of building more of the hard discount, the no frills and maxi stores. And they're also coming up with these, the customer healthcare centers within Shoppers Drug Mart that I think bodes well based on our health system around the country.
By reading the room and coming up with those kind of maybe more low budget stories, is that what you mean? Because people are looking to save?
Absolutely. I mean, depending on where, there's something called the K-shape economy. I'm sure you've heard about that or read about that, but a lot of Canadians are on that bottom slope. And I think the growth of hard discount, is going to help, because a lot of Canadians are looking to save money, with the inflation we've seen, global inflation and food prices.
You mentioned as well, like there's a lot happening right now with Loblaws. You mentioned, the expansion, the new funding, the new stores, 70 new stores coming, 191 locations being renovated in 2026. Also, the grocer looking to start something up so you can order your groceries through ChatGPT. There's a lot of different things that Loblaw is kind of working toward it. What are you most excited about when you hear about all these new developments?
Yeah, I mean, beyond the hard discount growth and that, I'm really excited about the announcement with AI. They're one of the first companies in Canada and North America to partner with OpenAI and with Google Gemini. So, as a consumer, a lot of consumers are using AI agents now, AI apps, to look for things, discover things. And I think it's pretty astute that they're right there with their brand to help them do that.
You also mentioned, Loblaw reading the room, opening more no frills, kind of catering towards a lower budget grocery store. Is consumer spending more of a concern for companies like Loblaw and for grocers in particular as we head into 2026?
I think it's always a concern, but Loblaw is fortunate that they have a number of different banners, right? So they're covered sort of in the more full service spectrum with Loblaw and all their other banners, T&T, et cetera. But they've also got a strong presence on the value side, and then they've got Shoppers Drug Mart. So they're pretty well diversified. The other thing I like is they've actually quietly done a really good business with their supply chain and logistics as a service and their retail media division too.
Is there a particular story that you think Loblaw's fundamentals are telling investors right now?
To me, it's a great story. They have good momentum. I think there's solid momentum. I think they're reading the room. They're meeting Canadians where they need to be, and I think they got a good future in Canada in this sector.
In terms of competition, though, I mean, how does Loblaw fare against competition? Is this a name that you think investors should be looking at or adding to their portfolio, or is there someone else who's maybe doing things better?
I can't really think of another company that's doing things better. You look at Metro, they're a great company, Sobeys as well. But I have to say that of the three big grocers, Loblaw would be best in class. They would be the leader in the market. And, I see so much innovation coming out of them that I don't see quite as much out of the other companies.
Okay, Bruce Winder, president of Bruce Winder Retail. I appreciate your time today. Thanks so much.
Yeah, thanks. Have a great one.
You too. Well, coming up, Thomson Reuters saw its biggest intraday gain yesterday since October of 2008, and we got more on what's driving the stock with the company's CEO. That's coming up next. Stay with us. Thomson Reuters announced it has reached 1 million professional users on CoCounsel, its legal and business AI platform, and revealed a new collaboration integrating Anthropic's Claude model. So for more, we were joined earlier by Steve Hasker, president and CEO of Thomson Reuters.
What we've done is we've created an AI platform for fiduciary professionals. So as you said, lawyers, tax and accounting professionals, auditors. Essentially, we developed it a couple of years ago, and we've developed it in such a way that it is model agnostic. So in other words, we can take the very best enterprise focused foundation model and swap that in. Now, at the moment, in our view, based on our testing, that's Anthropic's Claude suite of models. We have, though, developed our own model called Thomson, which is starting to outperform many of the models specifically for legal. And so it wasn't developed with Anthropic or Claude, but certainly we think their enterprise models are the best at the moment, but we've created some flexibility as we go forward.
I asked that because, of course, the investors were alarmed to hear about Anthropic developing plugins for Claude that could work specifically with lawyers. You have said that where the AI is the biggest change for the legal profession, really, since in the modern era. Tell us why. How will it be so important?
Yeah, I mean, the legal profession sort of in its current form, I think, is probably three to 350 years old.
Okay.
It was sort of started in the tea houses in the city of London all those centuries ago, and it sort of fundamentally hasn't changed all that much. Certainly, word processing technology and e-discovery and other things have made some differences, but in our view, this will enable lawyers to be this being AI, will enable lawyers to be very, very significantly more productive.
Mm-hmm.
And I think what investors missed with the sort of Anthropic announcements and some of the moves of the foundation models is at Thomson Reuters, we serve fiduciary professionals.
Mm-hmm.
And I think we have to distinguish, and investors, I don't think have done this yet, between sort of knowledge workers, so that's general office workers at one level, professionals, so whether that's salespeople, communications, marketing, architects, whatever it might be, from fiduciaries. Fiduciaries being lawyers, tax, accounting, audit and the like have to be right. I mean, the consequences of being wrong are very, very severe for fiduciaries. And what we do is we combine a model like Claude with, I think most importantly, our content. And we've got centuries of curated, highly specialized, very accurate content with deep domain experts, thousands of them who train our agents. And what it does is it produces results that are fiduciary grade versus results that may be 95% right, which is not acceptable to these fiduciary professionals.
Yeah, I mean, that's the big thing, isn't it? It's got to be right. Although your stock is down by half in the past year. I mean, the market, that's a lot of bright people have been selling the stock. Are they completely wrong?
I think they are. I mean, I think they've missed this point about the quality and the importance of content and expertise to train these agents in this environment. We think we're the only player who can do that effectively and meet or exceed the needs of these fiduciaries. And so we think the investors have missed it, certainly over the last 6 or 7 months, and particularly over the last few weeks.
I have to ask you, and I don't think I'm going to get an answer. The Thomson family of Canada hold a big stake in Thomson Reuters. They have lost tens of billions on paper here. Have you talked to any members of the family?
Yeah, we're in close contact with the family. I mean, bear in mind, in the prior 6 years, the stock rose from $65 up over $200. So net, it's been a positive trajectory over time, and we have every intention of arresting the recent decline and getting back to those levels, and that's what we're laser focused on doing.
You've been on something of a PR campaign this week, or at least you're out there telling the street and the media, hey, we're fighting back here, and this threat is exaggerated, in your view.
It certainly is. And, while we don't like to see this sort of pressure on the stock price, the business continues to perform. And as a team, we are laser focused on getting back to where we think we need to be and deserve to be.
You have this hoard of legal data, and as you say, it goes back centuries. You ingest tens of millions of legal documents every year. So is that proprietary, or can other people get at it?
No, it's proprietary. I mean, essentially what we do is we take many, many different sources, including court records and all of the sort of case law in jurisdictions across the world. We ingest that, but most importantly, our attorney editors, and we have 2,700 of them on staff, spend all day, every day interpreting those findings, dissenting opinions, figuring out which cases are relevant precedent, which aren't. And then in addition to that, we have many hundreds of practical law editors who are creating the best version of a particular draft, the best clause, the most specific IP for legal practice areas. So sort of that which is publicly available is a starting point, and it's an important starting point, but it really is the value add that our talented staff members add. That's what makes the difference, and that's what delivers the accuracy and the depth of expertise.
You do have competition coming at you, though. LexisNexis, your arch rival, teamed up with a legal startup called Harvey. I know you've said there are frothy valuations in these AI spaces, but you do have competition sniffing around.
Well, we've always had, I think we've always had, formidable competitors that we respect, and we've been able to invest appropriately and outrun them. And so we're not arrogant about it. This is a moment of disruption, but we're certainly confident in our starting point and the plans we have going forward.
What do you?
That was Steve Hasker, CEO and president of Thomson Reuters. Well, Mexico appears to have calmed down after a deadly cartel violence near Puerto Vallarta, and it had tourists and others hunkering in place, of course, earlier this week. The country is attempting to project a sense of being back to normal despite a beefed up military presence, and Global Affairs is still advising Canadians to use a high degree of caution and take it day by day. CTV's Avery Haynes has more in this report.
I want to show you the destruction that was left by the Jalisco cartel rampage on Sunday. This used to be a convenience store. If you look way back in there, there's still beer in the cooler. Oxxo's kind of like 7-Eleven, and more than 100 of them were hit across this region. Here's how they did it. They take bags of gasoline, throw it inside, leave a trail of gas, and then set it on fire. Just down the street, the parking lot is a graveyard of burnt cars now being cleaned up. The big news for Canadians who have been stranded here since Sunday is that the airport is open again. Long lineups as travelers are about to end a vacation they will never forget.
It's been harrowing. You're having such a great time, and all of a sudden, without any warning, this happens and you're in a shock.
Were you scared?
A little bit, because I have my daughter with me. And
These are not sunsets and beach photos. Oh my Lord.
oh yeah, there it is.
It'll be a good story to tell. I mean, we're just happy that we're safe.
If you have to be confined, sheltering in place in a resort on a beach with a pool and an open bar, it could be worse. But yeah, glad to be going home though. And it's a real shame because it's a lovely place. The people are wonderful. And this is going to be a black eye.
55,000 Canadians are registered with Global Affairs as being in Mexico. That number is getting a little smaller now that the planes are taking off again. But there's frustration at the airport, too, because some Canadians say they can't book another flight. Avery.
Okay, we will take one last look at the markets before they close today. We'll start with the TSX, watching this one closely because there is potential we could see another record high today. It right now is past the 34,000 mark, and that is the first time we've ever seen that. So we'll keep watching that. U.S. markets also trading higher today. We know traders bracing for NVIDIA's results, which are coming out in minutes from now, or 4:20, I believe. Investors hoping for evidence that maybe AI remains intact, the state of AI. So trading up at the moment. Up next, we've got the closing bells on Bay Street and Wall Street. So stay with us. Here are the closing bells at the NASDAQ today. Bio-Techne is ringing the closing bell. At the New York Stock Exchange, Bristol-Myers Squibb Company is ringing the closing bell. And at the TSX, Alkane Resources Limited is celebrating the company's listing on the TSX. You're watching The Close on BNN Bloomberg. I'm Lindsay Biscaya. Here's how we close the day on Bay and Wall Streets today. Okay, so we'll take a look at the markets. The TSX is up. It's reached another record high, past the 34,000 mark. That's the first time we're seeing that. It finished the day up by 0.4%. So we'll continue to watch that. It's kind of a similar story south of the border as well, though. If you look at the S&P 500 and the NASDAQ, both trading up today. The NASDAQ in particular up 1.2%. We know investors all day have been watching, waiting for NVIDIA's results, which are coming out after the bell in about 20 minutes from now. A lot of investors looking to see what this means for the world of AI when it comes to NVIDIA releasing its latest earnings report. And we, of course, will bring that to you live when that happens. If we take a look at some of the big movers of the day on the TSX in particular, exchange income, big mover on the TSX after the aviation and specialty manufacturing company reported Q4 results, which beat estimates with an adjusted EBITDA. Thomson Reuters, we've been talking about this company a lot over the last couple of days, up today after the company announced a new $600 million share repurchase program. It was the top performer on the TSX to finish the day. We'll be talking about that in more detail in just a moment. Loblaw, the biggest lagger on the TSX today. On the flip side, it dropped the most since 2023. This comes after a weak fourth quarter report. And as we've been telling you, analysts were calling that a, quote, low quality adjusted earnings per share beat. Elsewhere, another stock we're watching today is HSBC Holdings. So finishing the day up by more than 7%. Shares were surging all day today. This is Europe's largest bank. And this all comes after it reported earnings that beat estimates and raised some targets. And we're, of course, continuing to watch some of the Canadian banks as well as they report earnings this week. So for more now, we're joined by Bloomberg's equity reporter, Stephanie Hughes, to break down a couple of the big movers, starting off with, as I mentioned, some Canadian banks. National Bank reporting today. Most say that these are strong earnings reports, Stephanie.
That's right, Lindsay. So National Bank shares got to a new all-time high today after that stock gained by 7% at its peak, as you mentioned, on the back of some pretty solid earnings. And it's also the biggest intraday gain since April. So it's been a few months since we've seen a move of this magnitude. And that's because the Montreal-based lender reported adjusted earnings of $3.25 a share, which came well ahead of what analysts were expecting, which was closer to $2.95. So that was driven by strength across its major segments, primarily its personal and commercial lending segment. But on top of that, it also saw strength in its capital markets and wealth management segment. Not only that, but also its provisions for credit losses or the amount of money that the bank sets aside for loans potentially going sour. That was in line with what analysts were expecting, so it kind of suggested some stability there. So all that, on top of that, the bank also said it plans to repurchase some shares and raised its return on equity target for the full year, which Jefferies analyst John Aikens said would be well received by the market. He ended up being right. Just look at those shares go. And after closing the Canadian Western Bank acquisition this time last year, the company said it's making faster progress on reaching that $270 million synergy target by the end of the year. So all of this good earnings news is working in tandem to really give a boost to shares, and it's really being well received by analysts and traders alike, Lindsay.
Yeah, no kidding. Another company that is doing quite well today, Thomson Reuters. We've been talking about them a lot over the last few days, finished on the top of the TSX. They announced a plan to buy back up to $600 million in shares, as we mentioned. So tell us more about what that means.
For sure, Lindsay. Yeah, so Thomson Reuters, things are looking up for this company. It's on the top of the TSX best performers list for the second day in a row, I should say. Those shares gained by nearly 12% at their highest point. So that's helping it, building on gains from earlier this week and helping it to recoup some losses earlier this month because of an AI rout. But to your point, the firm announced that it would be buying up to $600 million in shares in a normal course issuer bid approved by the TSX. So that's expected to be 60 million shares, between last August and this upcoming August 2026. So that's the second day of gains. Like I said, yesterday it announced that it hit a milestone of about 1 million users on its co-counsel legal AI tool. And also got a shout out from the AI juggernaut Anthropic, which during its tech briefing, where it also brought the CEO, Thomson Reuters CEO, Steve Hasker, onto the stage to talk about his product. And I heard that interview that you had with Mr. Hasker earlier in the show, where he talked about the AI product and really trying to get those shares to turn around. So earlier this month, just to provide a bit of context, Thomson Reuters did come under pressure because Anthropic announced an AI tool, an AI plugin tool on its Claude model that sparked these fears of disruption across the entire software space, but Thomson Reuters did end up getting caught up in that. So it is making some progress to recoup some of those losses, like I mentioned, but it is still a far cry from the peak pricing it had in the middle of last year. Then it was because of disappointing sales guidance, more recently because of those AI headlines, Lindsay.
Okay, that is Bloomberg's Stephanie Hughes reporting live for us. Stephanie, thanks so much as always. So we do have fourth quarter earnings coming in from Salesforce. And now a reminder, these results come at a time when Wall Street is increasingly anxious about disruption to software makers from AI upstarts like Anthropic. So over the past 12 months, Salesforce stock has actually plunged about 40%. So we're seeing after hours down by almost 4% at the moment. When it comes to fourth quarter results, we saw from Salesforce an adjusted EPS of $3.81. That's versus the estimates. So at topped estimates, which were at like $3.05. So a beat on that. When it comes to revenue, it was up 12% year over year, $11.2 billion, beating estimates there as well. Subscription and support revenue is at $10.7 billion. That's up 13% year over year. And so a beat there. And when it comes to adjusted income from operations, we're looking at $3.8 billion, up 16% year over year. It was estimated it would be $3.82 billion. So a beat there as well, just a very slight beat. When it comes to first quarter results for Salesforce, it sees revenue at basically $11 billion, 11.03. That's to 11.8 billion, beating estimates there by quite a bit. The estimates were about $10.9 billion. Adjusted EPS is $3.11 to $3.13. Estimate was just over $3.02, so a beat there. And we know Salesforce is increasing share buyback authorization to $50 billion. And up next, as markets await earnings from big tech names like NVIDIA and Snowflake, we'll look at an investment strategy for the software sector. So more on that coming up after the break. Welcome back to The Close. We are getting fourth quarter earnings from Snowflake across the desk right now. So it'll show you what those earnings look like. Snowflake's fourth quarter revenue is at $1.28 billion. It was estimated to be about $1.26 billion. So that's just beating estimates there. Snowflake's fourth quarter product revenue, $1.23 billion, estimated at $1.2 billion. Professional services and other revenue is at $57.4 million. So that's up 32% year over year and beat estimates there as well. When it comes to first quarter outlook, Snowflake is seeing product revenue at about $1.26 billion to $1.27. That also is beating estimates ever so slightly, as estimated at $1.26 billion. Snowflake seeing first quarter adjusted operating margin at 9%. 2027 adjusted operating margin at 12.5%, and 2027 product revenue at $5.6 billion. So that is also a beat on what was estimated. And we're going to continue to follow this earnings report. And also our next guest is saying investors should separate software stocks into two groups based on how AI will impact them. This comes as we're getting all these fourth quarter results in from some software stocks and from software companies. So joining us now is Matthew Tuttle, CEO and Chief Investment Officer at Tuttle Capital Management. It's good to have you join us. Thanks so much.
Hey, thank you for having me.
So I'm not sure if you've had time to go over this, the reports and earnings from Snowflake, but I wanted to ask you, first of all, what your thoughts are on it, if you have had time to go over it, or kind of what you were expecting to come out of it.
Yeah, so Snowflake is, we run one of our ETFs, MEMY. It's our 20 best ideas. And we put Snowflake in the other day. I mean, great earnings. The stock, the last I looked, was up big. Snowflake didn't sell off because people thought this report was going to be rough. They sold off because people just blindly hit sell on anything software related, based on AI. And that created a great opportunity, which is why we got into Snowflake the other day.
Mm-hmm. And also Salesforce reporting tonight, we're breaking that down, beating estimates for the most part. I mean, what does that tell you about companies like Snowflake and Salesforce and just the software sector as a whole? As you mentioned, it's lost a lot of ground over the past year and particularly over the past couple of months. Could we maybe see a rally?
Yeah, I mean, definitely. It tells you that, again, people just blindly went in and sold everything software related. And, as we said in our newsletter, a week or so ago, it really, in the software sector, it's a stock picker's market. So CRM we own that in our wealth management portfolios. It's not one of our top ideas, but we like it. And so, not surprising to see them announcing good earnings. It's not like, AI is not at a level where they're going to be a threat now anyway.
Yeah, and I wanted you to kind of go over some of your stock picks because I know that, when it comes to AI, there will be some stocks which AI will help when it comes to the software sector. Correct me if I'm wrong, and some which AI could make redundant. I know you've got a number of picks here, but maybe we'll just take two from each. So when it comes to some of the winners from these this sector, the software sector? Who do you think that will be?
Yeah, so Snowflake, obviously, which we talked about, that's a holding in Mimi. The other one is CrowdStrike, CRWD. We think that AI will need more cybersecurity, and quantum will mean more cybersecurity. So we don't see AI crushing cybersecurity. We see it augmenting cybersecurity. So those are my two favorite software names. And ServiceNow we own in our wealth management portfolios as well. It doesn't make it into my top 20, but I like that one also.
What about some of the stocks you think maybe investors should avoid as we see this all play out with AI?
Yeah, so, a couple that we don't like, EPAM, anything tech support related. I have an outsourced technology company, but more and more I'm using AI for tech support. If something goes wrong, I get an answer from AI right away versus having to wait for my tech guys. So EPAM is one we don't like. Upwork, again, you've got a network where you're outsourcing tasks and things. AI can kind of blow that out of the water as well. So, we'd be careful with names like that.
It's so interesting just to hear how people are using AI in their everyday life already, right? Do you foresee a time when companies in most sectors are going to be valued based on whether they are or are not using AI? And how soon is that going to happen?
Yeah, AI is going to be, it already is, but it's going to be a massive driver to this market. So, a lot of times people will go on TV and say, hey, it's a stock picker's market. And usually that's a cliche or a cop-out, but it really is a stock picker's market. To us, you want to be in the companies that are going to be helped by AI. You want to be in old economy companies that are utilizing AI. You want to be in, asset-rich companies that aren't going to get hurt by AI. And then you either want to avoid or go short the companies that AI is just eventually going to crush.
Mm-hmm. We're also awaiting NVIDIA's earnings, which are coming out probably in about 5 minutes from now. Is there anything you're expecting to see in terms of what we could see in these earnings that will tell a story about where the direction of these AI companies are going?
Yeah, NVIDIA is going to have blowout earnings. They always do. The question is it going to be enough to move the stock? NVIDIA is like an iceberg at this point. It's been fairly dead money for a while. Big believer that it's a must own. We don't see it as an asymmetrical play. Hopefully they'll blow out more than everyone thinks they're going to blow out. Jensen will pull a rabbit out of the hat and, it'll be up 8%. That's what we're hoping for. But, I wouldn't be surprised if they announce great earnings, in line-ish with expectations and, the stock doesn't move a lot.
What would that tell you, do you think, about the landscape of where we're at with these big tech companies? Or is that more of like a strategy?
Yeah, I don't know that they're going to be able to tell us, really anything at this point. I'm curious if, AMD is starting to make a dent. But that just, that broadens out semiconductors, so probably not a big deal. There's nothing I can really think of that, can give us any more information than we already have. Hopefully I'm wrong. Again, hopefully Jensen pulls something out and everyone's like, oh my God.
And just lastly, before I let you go, is there any kind of trickle down effect that you're expecting to see in terms of any software stocks or any companies that would maybe stand to gain from what we see from NVIDIA in a few minutes?
They could very well. And, if NVIDIA announces some deal with somebody, that could impact them. But, I think, I think the Snowflake earnings are going to be more important to software stocks. To us, that was kind of the most important earnings report for software. So I think that rising tide will lift a few more boats.
Okay, we will leave it there. Matthew Tuttle, appreciate your time. I like the portrait behind you as well. It's a nice touch. Thanks so much for your time.
Thank you.
It's Matthew Tuttle, CEO and Chief Investment Officer at Tuttle Capital Management. Up next, investors are waiting results from NVIDIA. So we'll get you those numbers right after the break. Stay with us. NVIDIA is facing a high-stakes moment with its latest quarterly results, with the world waiting for fresh evidence that the AI spending boom remains on track. It's supposed to be reporting at 4:20. We're still actually waiting for those numbers to come in. As soon as they do, we will break them for you. But in the meantime, we're going to turn to our guest, Ivana Delevska, founder and chief investment officer at Spear Invest. It's good to have you join us. So while we await these numbers, I guess I'll start with, what are you expecting to see from NVIDIA?
Well, thanks for having me, Lindsay. We are actually expecting a big beat based on the results that we saw from the hyperscalers. The question is going to be, how big does it come? We think that the surprise that came in CapEx is about $100 billion, and we're basically trying to model it out and split it around the different companies. So if you assume that 50% of that is going to go to NVIDIA or to chips, and then they have 85% market share, we think there is an expectation here of a few $1 billion of beat for the quarter and for the guide. So we're pretty optimistic going into the quarter. Some questions are going to be China, the durability of the growth. I think that's all going to come out mostly on the call. But I think the expectations are for a beat here.
It's so interesting to watch market reaction today, like all day, really. A lot of investors waiting for these results to come out. We saw U.S. markets are up. The TSX is also up. What does that tell you about, I guess, the importance of this report and just the importance that NVIDIA holds within market share?
Well, investors have actually been very skeptical going into this quarter. And I would say since the summer, there's been a lot of skepticism around the AI trade, whether we're seeing the returns, whether we're going to continue seeing significant investment. We think that investors are really wrong here to be so skeptical because we're clearly seeing the returns. A lot of industries are getting disrupted. And now the question is going to be, who is capturing the value? So from a risk-reward perspective, we think staying with the hardware layer is really the best place to be. The NVIDIAs of the world will continue to compound, but there are also other opportunities within this hardware layer that we think are going to be pretty interesting and will deliver outsized returns.
You said before you think the market is asking the wrong question when it comes to AI. So what is that, and what do you think the market should be asking instead?
Well, people are very concerned about, well, where are the returns, right? Because you see these mega caps, and they're really investing hundreds of billions of dollars, and they're not necessarily beating and raising on earnings. So you would assume from that, wait, there may be no return from AI. But I think what people are missing is that the return is actually aggregating at the consumer and the customer layer. So especially on the B2B side, we think a lot of businesses will be transformed. And you're seeing it on financials. We had a company called Altruist come up with a tax management tool. The financial stocks were down 20% on that announcement. And that's basically value accruing to the consumer or to the B2B customers of these companies. So I think there is a lot of value to be created. The right question to ask is who is going to capture it, and not necessarily whether the value is there.
You've also warned about something called circular spending. So for viewers who maybe don't know what that is, can you explain what that is and also why it's a concern?
Well, a lot of people are very concerned that NVIDIA is generating all these cash flows, and then they're investing them in a lot of these companies like CoreWeave. So the big concern that people are raising is that, wait, is this really fundamental drivers that are driving the demand, or is it just NVIDIA generating cash flow and investing it? And one thing I would highlight is that NVIDIA has been doing this for the past 15 years. So they really invented this market, if you will. So the reason why it's now becoming more concerning or obvious is because the dollar amounts are larger, but it's not necessarily that it's a new thing. So I think they're going to continue to invest in the ecosystem and generate pretty decent returns from some of these investments they're making.
NVIDIA was supposed to be reporting earnings about 6 minutes ago, so I just wanted to let you know, Ivana, we're still waiting for those to come in. So in the meantime, I know you do have some stock picks that you wanted to go over for today, so we'll do that right now. Your first one, is it Coherent?
That's right. So the way we're looking at this is we think the value at this moment, the best risk reward, is in the networking value chain, right? So optical components are key in terms of how you transmit data. And there is more and more content both on the scale up and the scale out side. So basically, the way you're building out these GPU clusters, you need to connect them one to each other, and optical components are key here. So Coherent is one of the leaders in this space, and we really like the stock here. The cycle just turned in the middle of last year, so we believe we're in the early innings here versus the chip trade. I think you're already 3 years into it.
You're also, another pick is Arista Networks. What do you like about this one?
That's right. So Arista is another leader in networking. That's really what's driving us to the stock. We think that as companies are looking for more sophisticated tools to connect their GPUs, Arista will be a beneficiary. The stock is actually a much better entry point here. It hasn't really done anything for the entire year, but they reported outstanding earnings, and we believe they're going to be announcing several more deals with some of their leading customers. So, and they're also building on top of those customers. So Microsoft and Meta are currently their biggest customers. We think that Spectrum is going to expand to others as we look forward.
Lastly, KLA, what makes this one attractive to you?
So we think the way we're looking at this here is investors need to look further out in the value chain. And now the best risk reward is in the companies providing the capital equipment. So we are at a point where we don't have enough memory, we don't have enough logic, so we need to make further capital investments, and these are basically the machines that make the chips that companies like KLA are providing. So I think if you look at the spectrum and you're looking for the newest kind of trends, this would be one of them, basically the capital equipment. Networking is already 1.5 years in, and I would say chips are 3 years in to the cycle. So I think that's really the right way to be looking at this.
Okay, we still don't have NVIDIA's results, if you can believe it. So, Ivana, we're going to take a quick break right now. Maybe you can stick around.
They usually come out a little late, so I'm not
okay,
surprised.
All right. So maybe that's not that surprising. We'll just take a quick break now, and hopefully when we come back, we will have those results. So up next, we'll also unpack President Donald Trump's State of the Union address and also evaluate whether he successfully addressed voter concerns about the economy and Iran. That conversation also coming up. Stay with us. U.S. President Donald Trump delivered a nearly 2-hour State of the Union address last night, focusing primarily on the economy and affordability as he seeks to sway voters before the November midterm election. So let's welcome George Pollack, senior analyst of U.S. policy, Signum Global Advisors, to the show. It's good to have you join us. Thanks so much.
Thank you for having me.
So when it comes to this address last night, I'm wondering, was there any kind of effective strategy presented by the president in terms of tackling affordability?
No, I think this was really a speech to his base. It wasn't a speech to the moderates, the swing voters, and those who are really concerned about affordability. What it really sounded like was more of a campaign rally than the typical State of the Union, where the GOP could really reframe and reassess its message heading into the midterms.
When Trump praised his economic policies, which of those claims were kind of backed by facts and evidence and which were not so much?
I think if you look at his economic policies, he deserves success on issues like energy. I think inflation, even with the tariffs, is up, but it's not as much as the economists were talking about. But I think on things like prices, he's completely off. I think when Americans go to the grocery store, when they go buy clothing, they're feeling that the prices have increased exponentially and they just can't handle it.
There was also like a lot of eyes and ears listening to see what Donald Trump would say about that progress between the U.S. and Iran. I'm not sure how much clarity there really was on that subject last night. What did you take away from what Donald Trump had to say?
No, I think that's a great point. This was really his opportunity to make a case to the American people that military action might be necessary in Iran. And other than mentioning that they're building missiles that might threaten the U.S. or the potential threat to European allies, he didn't really make that case. But what we also are taking away from that is he also didn't want to go into war. We're thinking the meeting on Thursday is likely going to lead to some success and delay whatever military action may come, because in not making the case, he's kind of showing his real reluctance to truly get involved in a military war or quagmire, however you want to call it, that would not look great in the run up to the midterms.
He also last night, Donald Trump renewed his call to prevent private equity firms from purchasing residential properties. Do you think passing legislation like that is feasible?
Yes, I do think that's feasible, especially because right now both the House and the Senate have their own housing reform legislation. And the administration has made clear, both through statements of administrative policy and at the State of the Union yesterday, that they fully intend to back this. And my understanding is they're socializing language around something around where it wouldn't apply to those who build rent to build, but it would apply to those who have own more than 100 single family homes. The reality is the end legislation will be nothing like that. There will be carve-outs, a higher number most likely. But I do think the president and his administration is willing to take housing reform almost hostage to ensure such a provision is included for the optics of taking on Wall Street.
There was also something that you feel, according to your notes, was kind of largely unmentioned last night in that address, and that was permitting reform. So can you explain why you think that's important? And yeah.
Of course. So the administration has really done a good job on building out its energy infrastructure and making a bet on basically drill, baby, drill, and making a longer-term bet on nuclear energy. But at the same time, in order to get enough energy online between now and when nuclear comes on, we need to improve our permitting infrastructure and our transmission infrastructure. And permitting reform is the perfect opportunity for this administration to say, this is how we're bringing America in the 21st century and preparing ourselves for the 22nd century. And that would unlock energy, help address concerns with the increase in energy costs due to AI, and allow the administration to really lean into a bipartisan positive win on infrastructure, which would seem to be right up the president's alley. Yet yesterday, that really wasn't discussed.
All eyes also on midterm elections coming up in November. At this point, the Democrats are holding an early lead in polling ahead of those midterms. What do you think Donald Trump might have to do to kind of reverse that before November?
I mean, the first step is he will have to acknowledge the fact that affordability is a crisis, because while the content and the message may have been different, the same idea is that everything at a macro level is great, so you should all be grateful, was exactly what President Joe Biden and Vice President Kamala Harris were saying, and look how that turned out. He needs to address the affordability issue, crisis, whatever you want to call it, and he needs to make clear to voters that he at least cares about that issue. It can't be him continuing to say that he has solved it. From there, I think he has to more work, emphasize on bipartisan opportunities and work with Congress, not say he doesn't need Congress. I think what Americans do want to see is a government that's functioning, and while a strong executive might not be disqualifying, they also do want to see that a Congress is active and the president is willing to work with it.
All right, we'll leave it there. George Pollack, Senior Analyst of U.S. Policy, Signet Global Advisors. Appreciate your time. Thanks for your insight. And breaking news, NVIDIA's earnings are now out. So we will go through them in just a moment, facing a high stakes moment with this latest quarterly results, as we were talking about. Let's get to the numbers. So when it comes to fourth quarter results, revenue was up 73% year over year to $68.1 billion. That beats estimates of $65.9 billion. Data center revenue at $62.3 billion, so up 75% year over year, and also beating estimates there. Adjusted gross margin is at 75.2%. R&D expenses, $5.5 billion. That's a 48% increase year over year. And that also beat estimates. Adjusted EPS is $1.62. When it comes to looking forward to the first quarter forecast, NVIDIA is seeing revenue at $76.4 billion to $79.5 billion. So that's up from estimates, which were $72 billion. And we're going to bring in Ivana Delevska again, founder and chief investment officer at Spear Invest, who has been waiting patiently for these results to come out. It's good to have you once again. Thanks so much for waiting. I'm wondering what you make of what we're seeing now that NVIDIA has actually released its results, beating most estimates. So this is maybe kind of the blowout earnings report that a lot of analysts were expecting.
Well, Lindsay, one thing I would add to what you just said is basically the quarter was a beat in terms of the reported numbers, a bit on the guided numbers, but even more importantly, the numbers they're guiding to, they don't seem to be including a lot of China revenues in them. And analysts had expected something along the lines of $3 billion. So this is even a bigger beat than what it seems on paper if you really strip out China from the numbers, because that could be incremental depending on how the licenses go. So we'll look to hear more details on that on the call. But basically, if it's really just the US that's delivering $78 billion in the next quarter, that would be a pretty positive surprise.
Okay, that's a good point. Thanks for adding that. NVIDIA's revenue was expected to jump 68%. It's up 73% year over year. So that's one of the big beats that we're talking about here. And I know I take your point, like we'll have to wait for the earnings call to get more details. But I guess what does that tell you about NVIDIA's performance and like the outlook as well for the year ahead?
I mean, I think it's clear that things are on track. I don't think that's a surprise to anybody. The question here is how much of a beat is it, right? Is it a $5 billion beat or a $3 billion beat for the quarterly numbers themselves? I think if you look out long term, I think the stock is trading at pretty cheap valuation here. So while in the past, this used to be one of our aggressive holdings when we were expecting over 100% return. Here, we think it's going to be more of a compounder, but it's still going to deliver very significant risk reward, right? So we think the downside here is pretty limited. You've seen it trading at this range. So I think it's really like based on how much do they beat each quarter, that's going to determine at what rate will they be compounding.
I know you're just going over the numbers briefly since they came out as well, but was there anything that was surprising to you at all that you're seeing in this report, or is it kind of on par with most expectations?
I would say, apart from the China comment, I would say it's on par with expectations. It's a little bit better beat, I would say, but definitely not a blowout that would take the stock up 10%. But given how muted expectations were and how worried people are about the AI trade, I think this should provide some comfort for investors.
You mentioned that there's not a lot of context in terms of China in this latest quarter. We know that NVIDIA has sold 0 H200 chips to China this quarter. They're expected to start selling in Q1. So I'm wondering, does that signal anything about the company right now or the direction they're going in, or is that just more data we're going to have to wait for?
I think it's more data that we're going to have to wait for, but it's clearly upside from where estimates are today. So we are not assuming a lot of China revenues. I know the street was assuming some revenues here for the guide. So that could come basically as incremental upside. We're really excited about the non-China market with these hyperscalers just constantly updating their CapEx numbers higher. And also, if you look at their competitors, I mean, really, there is very limited competition, even after 3 years into this cycle, right? So you're seeing AMD, they're making some strides, but they really, every time they do a big deal, they need to give up a piece of their company, right? And Google is also very well positioned, but they're really playing in that niche of recommenders. So it's still, even to our surprise, as somebody that is positive on the stock, we would have expected at least a little bit of competition here, and it doesn't seem like there is really any concern on market share.
Very interesting stuff. Okay, we will leave it there. Ivana Delevska, founder and chief investment officer at Spear Invest. Appreciate your time, and thanks for sticking around to wait for those reports to come out. We appreciate it.
Thank you, Lindsay.
Up next, oil prices are trading slightly lower today after some OPEC delegates indicated the group is likely to agree on modest production increases during its policy review meeting this weekend for April. We've got more on that coming up in a moment. Oil prices dropped slightly today as U.S. crude oil stockpiles posted a large weekly increase, and there are reports that OPEC is considering raising output for April. But traders remain focused on the potential conflict between Tehran and Washington. So let's welcome in Rob Tummel, Senior Portfolio Manager at Taurus Capital. It's good to have you join us. Thanks so much.
Thanks for having me, Lindsay.
So why do you think OPEC is planning to increase production? Is it maybe to compete with non-OPEC supply, or is there maybe just more tension expected in the Middle East?
Well, I think OPEC, has been gradually increasing its supply, returning some of those supply cuts back to the market. I think if there is some concern about Iran and exports out of Iran, I think OPEC wants to could demonstrate that look, it's there to provide some extra supply if it's needed, and so that would probably be the primary reason. But there's plenty of oil in the world. The global oil market is oversupplied right now, and so that's why we've kind of seen oil prices decline. The only reason why they've been up is, in my opinion, is because we've got a geopolitical risk premium that's now added into the oil price.
Got it. But I mean, if there was to be a supply disruption in the Strait of Hormuz with everything that's going on right now, do you believe the market is kind of sufficiently ready to absorb the loss of some of those barrels? And for how long would they be able to do that?
Yeah, no, that's a good question. We look at this pretty extensively all the time. And so the answer to your question is yeah, the Strait of Hormuz is very important. It's probably one of the, obviously one of the most important pieces of infrastructure in the world. So if there's a prolonged disruption, yeah, oil prices are going much higher. We don't think that that's going to happen. But could there be a temporary disruption, potentially, or damage to some infrastructure in the Strait of Hormuz? Possibly. From our perspective, oil prices probably could go up another $5 or $10 to reflect that escalating tension with Iran should it really continue.
I take your point that you don't feel like that's going to happen, but I'm just throwing hypotheticals at you for the moment, right? Like if there was actually to be a full-scale conflict between the U.S. and Iran, which is something a lot of eyes have been on for a few weeks now, who would be responsible for upholding OPEC production quotas? Would it be like Russia, Kazakhstan? Are there other countries as well? Who do you think would be responsible for that?
Yeah, Saudi Arabia probably would step in and could produce more, but once again, it needs to have access to the Strait of Hormuz, right? UAE could step in as well, but because you're right, if we have more than a temporary disruption, you're right. Oil prices could go well above $100 in the short term. But I do think that there is still plenty of oil supply available, and that there would be additional supplies of oil that would be able to come to the market should we have a longer term disruption.
Would Russia contribute to that as well?
I'm not sure if Russia can produce much more. I'll be honest. The Russian investment in the oil fields has been limited, and a lot of the oil majors are not in Russia right now, and so I'm not sure that Russia would add a significant amount to the global oil supply.
Because that's an interesting story right now as well. Like Russia also trying to comply with its OPEC quota, but using a lot of its oil production to fund its war efforts in Ukraine as well. Like how is that country balancing those two efforts, I guess?
Yeah, I mean, I think Russia's been trying to produce as much as it can. With the other OPEC countries actually increasing, adding back to the supply, to the global oil supply. You saw oil prices fall last year. They've rebounded a little bit this year, but they fell last year, and that's obviously hurt the government revenues in Russia, even though they've had producing a fair amount of the supply. Obviously, it's price times quantity, and the price has been much lower than it has been historically.
Let's turn more towards the Americas and North America, because we saw a report today that the U.S. crude oil inventory saw their largest weekly increase in 3 years due to higher imports. How much of that is coming from Venezuela at this point?
Yeah, that's probably, there's probably some coming in. Well, we know there's Venezuela coming in, Venezuelan crude coming in. I think the president has reported that even as late as last night. So yeah, we do know that there was probably some Venezuelan oil that's been on tankers that has made its way here to the U.S. Now that will be, we're not going to have a massive amount. We'll have some additional oil, but for Venezuela production to increase, it's going to take a substantial amount of capital investment on behalf of some of the large oil producers in the U.S., probably, and international oil producers, probably more along the lines of like Chevron and Exxon and ConocoPhillips, to see material increases in Venezuela oil production.
Just before I let you go, does Canada have anywhere to play here in terms of like increasing oil production and contributing at all?
Sure, Canada's still important. Absolutely still important. With low oil prices, demand for oil could continue to rise globally, and so the oil needed in the U.S. Consumer demand for gasoline prices are low. Driving demand could be pretty strong this year, and so I do think that Canadian oil, Venezuelan oil, all forms of oil is still relevant and to grow economies. And so yes, I do think that all forms of oil will be relevant for an extended period of time, because oil demand has gone up probably 40 out of the last 42 years. It will continue to go up, and we're going to continue to need sources of supply to keep this economic growth engine, both domestically and globally, going.
Okay, we'll leave it there. Rob Thumal, Senior Portfolio Manager at Tortoise Capital. Appreciate your time and your insight. Thank you. Up next, Canada aims to expand economic ties with India during Prime Minister Mark Carney's upcoming trip to that country, and we'll have more on that after the break. Stay with us. Prime Minister Mark Carney will arrive in India on an official visit later this week to expand bilateral ties in trade, energy, technology, and defense, among other areas. The IMF has projected India to be the world's fastest growing major economy again in 2026. And for more on the road ahead for economic ties between Canada and India, joining us now is Victor Thomas, President and CEO of the Canada-India Business Council. It's good to have you join us. Thanks so much.
Great to be here, Lindsay.
So as I understand it, you are also headed to India soon for kind of like a side view of exactly what's going to be happening with Prime Minister Carney's visit. What do Canadian businesses want to see out of this, do you think?
Well, it's been interesting. The last couple of years have been a little challenging on the diplomatic front. And one of the things that both governments had agreed upon is that business should continue. And now we're actually seeing the governments not only getting along, but actually meeting regularly. We've seen ministers from both countries in the last 6 months. We have high commissioners back in place. And of course, Prime Minister Modi invited Prime Minister Carney at the G20 to come. And sure enough, he's not only made the time, but is coming with 2 premiers and up to 4 senior ministers of his government. So it's a pretty significant trip.
Yeah, the premiers of Manitoba and Saskatchewan, I believe.
I believe New Brunswick and Saskatchewan.
Oh, okay. I thought I could be wrong about Manitoba. Yeah, I mean, this is kind of a similar story of what we saw when Mark Carney went to China, right? Like at first, a lot of people were wondering whether this was just going to be a trip to warm relations after some frosty tensions over the years, and it turned into a lot more than that. So what are the expectations, I guess, that you're thinking might happen out of this trip? Could there be some kind of trade agreement on the table?
Well, I think, we've been in discussions with India since 2010. A number of our closest allies have actually gone ahead, like Australia with an early progress agreement in 2022, the UK in 2025. And just last month, you saw a major landmark agreement with the EU on the 27th of January. And then the US early this month, of course, also has a new agreement with India. And so it's about time. And the 2 prime ministers signaled that they're looking to do a comprehensive agreement at the G20 in South Africa at the end of November. So we're hoping that the signaling is continuing, but actually they're going to move to get that done, hopefully even by the end of this year.
Interesting. We know that energy is seen as one of the key sectors for expansion, given India's demand and growing demand for energy. On the flip side, does Canada have enough to be able to support that kind of demand?
Well, really, from our standpoint, we have what India wants. It's a matter of actually getting it to them. And what they're asking is for reliable, stable, and very cost-conscientious pricing. And of course, our new pipeline and then the new LNG terminal make a big, play into that significantly, as well as, we had a major significant uranium deal from 2015 to 2020. And hopefully we can get that back on track as well.
When it comes to agriculture, India has been a long-time importer of Canadian lentils. I'm wondering what you see on that front. There's been a lot of political pressures of late, particularly within the agricultural sector. What are you expecting there?
Well, India is the most populous nation on earth now. That's a lot of mouths to feed at 1.46 billion. And again, high quality, environmentally sound agriculture. And it's a matter of just being able to be tried and true. Hopefully we can actually get some minimums in comprehensive agreement. And I know our farmers here in Canada are very much looking forward to that. And sometimes when there are fluctuations in a market, when farmers are not happy, politicians on both sides hear it. And I think that's been part of the challenges ongoing over the years. But hopefully we can bring a little bit of certainty to it.
There's also, of course, the U.S. to worry about anytime Prime Minister Mark Carney goes anywhere to talk trade with any other country, especially if Canada's, got some ambitious trade ideas coming with India in like critical minerals. So how much would the U.S. factor into any decision that Canada makes with India?
Well, I think the U.S. factors into everything in terms of when we hear the word diversification, it's typically tied to the U.S. But it's interesting when you look at who the Prime Minister is actually meeting with on this trip. He's going to India first. Then he's going to Australia, and then he's going to Japan. Those 3 countries with the U.S. make up the Quad in terms of security, which has been meeting regularly the last 9 years. And, India, if you look to diversify, as you mentioned earlier, the largest growth economy in the world, you have to go through India.
Yeah.
And so I think the numbers that he talks about in terms of expansion, in terms of trade, India is where you can actually see that because of the scale.
Okay. Victor Thomas, President and CEO of the Canada-India Business Council. We're out of time, but I appreciate you joining us. Thanks so much. And that does it for today's program. Thanks so much for watching The Close. We'll see you tomorrow.